This is our Forex blog for November 14th, 2012. And like we do most days, we use our currency meter to find which currencies are strongest and which are weakest, and we buy the strongest versus the weak. It's very clear today to see that the yen is the weakest. And when I say the weakest, I mean on all time frames, because our Build Your Own Trend, which is a live-only tool, allows you to set the weights in the studies settings that each of these uses. You can see I've added the daily, weekly, monthly trend, 4% weight for the monthly trend, 13% for weekly, 18% for daily, and the majority of our tools are very short-term, 2-minute, 5-minute, 30-minute, hourly trend. We have tools that measure both the direction and the intensity of direction. So in other words, if the yen's going down against 70 to 100% of other pairs, and it's doing so with 100 to 150% of its normal volatility for that time of the day, you're going to see extreme weakness at or above the dotted 80 level. And so you can see the euro was very strong, the yen was very weak. The Swiss and the euro are pegged together, so they're both moving in the same direction. Let me minimize this here. And now you can see also the Australian was strong earlier in the day. So mainly you wanted to focus on the euro yen by buys, CAD yen, and later in the day when the dollar started showing incredible strength, you could have bought the dollar yen, or you could have sold the New Zealand dollar. So let's bring up some of those currencies and we'll go over them. So here's the euro yen, and you can see on the bottom the real-time momentum favors the long side. The 15-minute trend, hourly trends up, daily trends up. However, the weekly, monthly trend are down. So, you know, at some point this market's likely to reverse, and you can see quite a few sell signals up at the high because the longer time frame trend is down. You can also draw your fibs off of previous moves to get an idea of where the market's going to stall. Most of the time, the 1.618 fib of the first big move up, this is a 77 pip move up, this is likely to be the max high. So you can really look to go short here, get short, scale in, get short, scale in, and have three excellent, in four if you count this one, counter trend trades at the high. You can use our signals to look for buys, or you can just use two different entry methods that we discuss. One is when you identify a trend, you look for a rectangle pattern, it breaks out of there, you want to buy, and also wait for a pullback. You know, draw a trend line over the bar's high. When it breaks that trend line, you get in, and you always want to draw a fib off your last little tiny swing. This is a 38 pip move. You can see the market went right to the 1.38 fib target, which happened to be a daily pivot, 50-day moving average, major resistance, and our upper bands. So that was a great place to get out. But you can just basically, when you find a strong currency, just wait for our buy signals. Buy here, here, here. Obviously, we miss a few trades. It's very hard to have a computer recognize a perfect rectangle pattern like this, and so you would have to decide whether you want to take the risk of buying up here near the highs. But this is an excellent way of trading, and for brand new traders, you know, you'll find that the trend trades are triangles, the counter trend trades are circles, the lower odds counter trend trades are gray, and the higher probability ones are red or green. You know, statistically, based on my past experience and looking at hundreds and hundreds of those trades in action on previous charts. You know, whether or not it works today, you never know. You know, it might be 50-50 of a certain pattern, and these signals are based on over 50 different individual chart patterns. Some of them don't get hit for, you know, maybe a week or two, and other ones might have 2 or 3 of that particular pattern get hit in a particular day. So that was one currency we'd want to trade with today. Let's take a look at the New Zealand dollar, looking to sell the New Zealand dollar after 6. Okay, so this one broke down. You can see right here around 6. This is a range chart, so it was not much activity until the market broke down, and basically the first real trend continuation was this rectangle pattern right here near the lows. Again, you always want to draw your fibs off the previous swing to get an idea, and usually it's somewhere between the first and second fib target. The second fib target, it tagged it by almost a pip and then reversed. And so, you know, basically once this thing broke down, you can look to go short, you can put alerts on here and not have to watch every pip move of the price. And when your alert gets hit, you can have it send an audio alert, email alert, or cell phone alert. I usually use the cell phone alert method. I'm wandering around the house, alert happens, and I'll get short. And let's say I wanted to buy down here, I can just simply drag this line down here, right click on it, create an alert, click OK, drag this where I want it. Let's say I want to buy down here. When it comes down and hits my price, and I always put it 5 or sometimes 10, 12 pips away from where I want to get in, I have plenty of time to get back to the computer, look to get into a trade, and outside the bands you can usually scale into a pretty aggressive big lot trades. I do anywhere from 10 to 30 lots underneath there. So if I scaled into a 10 lot position and it goes up 10 pips, I made $1,000 on that trade. And this one, you can see I would have got in probably a smaller position because it never went past my first entry here. So I might have had a 5 lot trade that went up 20 pips, which is also $1,000 on less risk. But anyway, that's how you use our software in the signals. And so many people trade the Eurodollar, so I'll just bring up the Eurodollar today and show how our buy and sell signals did today. You can see that this one was above the point of control, which is the yellow line of the previous day, above yesterday's value area high. And typically when a price is above the value area high, you want to buy at that price and above. This is the previous day's high. By seeing the value area, and it's basically a part of market profile technology, when it's above that, you can really look for 3 to 5 bar pullbacks, which you can see right here. When it has a bar that closes up, you can see that's one of our entry patterns. Found about 20 pips here. You would have made about 5 pips here, 20 pips here if you got out right there, or actually 15 pips here. If you held on to the upper value area, you would have made another 20. This one right here would have been a loss. And sometimes when you get a buy signal, there's not a perfect chart pattern that happens after it. That's why I use a displaced moving average. If I wanted to buy right here, and let's say I have a small loss, 5, 6, 7 pips, I get back in again here when it breaks above the displaced moving average using our digital signal processing technology, and you can see it shot up 15 pips. Counter trend signal right here, pretty high probability, pulled back, found the low, found the high, found the low, found this one right here, it went up, market pulled back. You can see that our signals are extremely accurate and also nailed the high. And these only work live too. Some of these signals only work live, so if you bring them up after the fact, you're not going to get them. But you can use our build your own trend tool, which is also a live only tool, to decide whether to take the trades or not. But pretty high probability, and especially if you get a buy signal or two and it's below the displaced moving average, or you feel it's gone up too much, just simply wait for it to go above the very fast digital signal processing based moving average. As soon as it goes above it, then you buy.